Okay, we'll just come to the second. We've got Vaibhav Agarwal and Suruchi Jain also joining us. Vaibhav, all the numbers, the entire PNL must be in front of you. What is it? Good, bad, indifferent?
Well, I think it's like the indifferent option. I mean, more or less, these numbers are in line, with expectations, both on the NII as well. We were expecting around 13,832 crores. Even on the bottom line, around 3569 was our expectation. So these are more or less in line. Even asset quality, once again, it looks more or less in line. First quarter is expected to be a little weaker than fourth quarter for SBI. I think in that sense, more or less, these numbers are in line.
Okay. Vaibhav, how have you read the slippage figure of 7,318 crores this quarter?
Again, in fact, this is pretty much exactly what we were expecting at around 7,500 crores. One has to look at it on a year-on-year basis. Same time last year it was 10,000 crores, it's 7,500 now. One cannot look at the 4Q number while comparing for SBI. There is a little bit of seasonality there. But, broadly on a year-on-year basis, there is, a trend of, some degree of improvement in SBI's asset quality.
You have a buy on the stock?
Our target price is 309.
Your target price is?
309.
Okay, so a mild buy you would say even now. Suruchi Jain of Equity Research Analyst is with us. Suruchi, of Morningstar is with us. Your thoughts, Suruchi?
So I think, the State Bank is one of the, last banks among the banks that we cover to release its earnings. And what we've seen across the system is that deposit growth has been faster than loan growth. And so we aren't surprised that the NII growth has come under pressure. If you see year-on-year, deposits have actually grown at 12% as people are locking in a higher interest rate in a, interest rate falling environment. So people end up getting more into term deposits and locking in their interest rate.
Yes, but what have you made of the slippages number and of the stock's performance itself?
So I think in terms of the slippages number, it's not a surprise. I think overall NPAs as well, they are broadly in line. And you have to keep in mind that the loan book is growing, albeit at a small, slower rate. So the slippages number in absolute terms, might look high, but I mean, it's on a growing loan book. So I think overall the numbers were more or less in line. What we were hoping for is a bottom line number of 5,200 crores. And it's this is at a consolidated level. And it's actually come at a 4,700 crores. So a slight slip, I would say, mainly on the NII figure and as well as the higher provisions.
Okay. So that would be your key disappointment, the NII this quarter and not the fresh slippages?
I think, yes, what we're looking at is not just a quarterly slippage number, because when we look at loan book quality, we definitely think SBI and ICICI loan books carry higher risk and as a result higher slippages. And we sort of build that into our valuation. So our valuation currently on SBI is 315 per share. And if you see, we've mostly been more bullish on, say, an HDFC Bank, Axis Bank, who I think manage slippages and their loan book quality a little better than the ICICI SBI. And of course, these are corporate lenders versus retail lenders.
Yeah.
So you can't exactly compare them.
Yes,
but I think SBI just carries a higher risk.
Yes, Vaibhav, what would you look out for now to judge the stock if you have to alter the 309 price target you have?
Well, all said and done, their net interest income growth is really very low. So, and SBI is, the one bank in PSU with 9.5% tier 1 capital adequacy. So if growth has to come in the sector, on the PSU side, it has to start from SBI. So, that would now determine whether, there can be further upside to the stock.
Okay, well, we have the standard outstanding restructured book as well. It stands at around 5,954 crores, and this compares to 5,483 crores that they did last quarter. So it's just a mild rise of around 0.8% that is released by the management, but I'll still wait by. But overall, we're getting the standard outstanding restructured book just about flattish.
Now the restructured asset book will only be watched for the amount of part of the book that is falling into NPLs and what is not. So that really would be the crucial number to watch, because the overall pool of restructured assets cannot grow. They will grow as refinanced assets under a new name. Vaibhav, that would be a number you would crucially watch out for, refinanced assets?
Yeah, I mean, that would also be definitely, an important number to understand as to, how much they're doing with sectors and on what terms as well.
Okay.
Fair point. All right. Yeah. More questions.
Vaibhav, I just wanted your thoughts with regards to the sale of loans to asset reconstruction companies. Do you think that based on what you've seen on the P&L, that maybe the gross NPLs could be contained this quarter because of that? And if in case there is a higher figure like we saw last quarter, would that be a disappointment to you?
Yeah, I think we'll have to wait and watch, what the management gives us the breakup. It could also have been because of write-offs. SBI does take a larger amount of write-offs as well. So one has to wait and watch what the breakup was of the movement of gross NPAs.
Fair point. Thank you very much, Vaibhav, Suruchi, for joining us with your first thoughts. Well, I think the verdict is that it is in line with expectations in terms of slippages, but that doesn't make it a good figure.
Yeah.